Happy Sunday, everybody. This is Danny Naz, aka The Pup, bringing you this weekend's technical analysis. So, we got a lot to go over. Let's just get right into it. I'm sure all of you remember this scene back in Memorial Day weekend. Everybody was out, having a good time, going to the beach, hanging out. You see this guy right here. He's pretty grateful. I bet he's pretty grateful wearing this mask. You know, this guy right back here is wearing a mask, but look, no mask, no mask, no mask. Any surprise that 2 to 3 weeks later, and now we're having a resurgence in COVID? I'm not surprised. So what does that really mean for the broader markets? We're seeing a rise in COVID cases in Florida, in Arizona, in California. I just saw this news come across on CNBC. The NIH halts clinical trials of hydrochloroquine after finding no benefit to coronavirus patients. So all the hyping of the hydrochloroquine seems to have been just what it was. It's hype. We just have to kind of wait and see and what's going on here. But in the meantime, the man of steel, that's not a typo, pumping more money into the economy, maybe a little less than last week and a little less than the week before that. But, the Fed is now buying corporate bonds and ETFs. So, long may this rally live. I don't know what to think, but I'd go into every day with no bias. I just trade what I see every day. I'm pretty much mostly cash. Got some long-term holdings, but just really managing my positions. But having said that, U.S. banks are swimming in money as deposits increased by $2 trillion amid the coronavirus. So we've quickly gone from a consumer society to a saving society. So very interesting implications that could have for the future. So I think that remains to be seen what the actual macro impact will be. But we can look back in history and see when we were a saving nation, what was going on then. But maybe we'll crunch those numbers at another time. So let's just dive right into it. Like usual, we're going to go over our major indexes. We have the SPX. And you could see here we had this island reversal and we gapped down, kind of flagging a little bit here, but reality is we're not back over this trend line. We're barely holding on to the 20 moving average. So I think this is something that we need to keep an eye on. Just really as simple as that. Next is the Qs. Technology, obviously very strong, broke out of our all-time high over here. Retested, came back and pulled back to our 20 moving average, but closed over. And now we're back, possibly coming to a double top here. I would just watch for breaks below this 237.57 level, as well as the 20 simple moving average, which is our green line here. And that's all I got to say about the Qs. Next up, we have the DJX, which is our 1/100th of the Dow Jones. We're consolidating a little bit, getting squeezed a little bit between the 20 and the 200. The 200 SMA right now is acting as resistance, so not really looking that great. If we can't recapture the 20 here, I'm going to look for a bounce down to the 50. We had this bounce and hold right here on the 50, and right here we had that breakout and retest. So let's see if the 50 holds up if we continue to break down under the 20. Next up is IWM, small cap stocks, Russell 2000s. And it's kind of a similar story than the S&P. We lost the 200 here on this island reversal, gap down. We came back, retested the 200 simple moving average. We sold off, and now we're hitting this little bit of a supply zone here. So let's see if this holds, this little launch pad that we like to call. And we went in for a soft landing, and let's see if we can continue and retest this 200 and break back out. Next up, we got the bonds, TLT. Got this massive symmetrical triangle going on. We're below the 50 simple moving average. We tapped the 20 and we held. So, but we're still in this triangle. So don't see really a play here until we break one way or the other. And that's it for the indices and the macro. So let's just go right into it. I'm just going to review 2 trades that we did this week that were our top 2 trades. For those of you who don't know, myself and 2 other traders started a new service called Our Trading Edge. It's really an educational forward platform where we're bringing on younger traders, less experienced traders, and really giving them the fundamentals of technical analysis, how to become a chartist, and just how to really benefit from the market that we're in. You've seen the news with 3 million plus new Robinhood subscribers, tragic death of a young man who was trading options, and just a really sad story. So we really just want to make sure that if you're going to trade this market, we want you to trade it safe. We want you to have at least a foundation of knowledge so that you're not trading blindly. And the beautiful thing about our group is we have 6 top traders. We've got 3 stock analysts. We've got a couple of macro guys, a couple of AI guys, and guys and gals, I should say, because we do have men and women on our team. And we've got a couple of hundred members already signed up. It's been only 1 week, challenging week to start, but we did really well. And we're just really looking forward. And if you guys stick with this video at the end, I'll give you some updates about what's going on and what we're doing behind the scenes. But let's get into some charts. ROKU, again, like I was saying, was one of our top trades of the week. We were waiting for this break of the 115 level. We knew that this was a major resistance level to break through. We powered through it. We came back and retested this 50 simple moving average on the daily, and then we just took off. We took the trade over 115. We took the 120 calls. Once we took our profit at 120, we rolled up to the 125s. Then we rolled up to the 130s. And now we're sitting in cash and hoping that if we do get a little bit of a pullback next week, we could still look at the 130s or maybe the 135s. So it remains to be seen, but we did really, really well in this trade. Congratulations to everybody who took it. And I did post it to my social media, so hopefully you did catch it as well. Next up is Spotify. This was another call that I made out in our group. This was actually a pretty easy call. We had Spotify not too long, maybe about 4 to 6 weeks ago, signed Joe Rogan over for exclusive content on their platform. Spotify shot up right here. No surprise, shot up and then consolidated. And so the news this week was Kim Kardashian is now signing up with an exclusive content contract. So, I mean, come on, that's just Joe Rogan is a huge podcaster. Kim Kardashian has a huge internet social media presence. So really no surprise that we were looking at this to run. This was a gap up that happened that morning. We opened up at around 205, 206. We shot up to about 220. A lot of the guys in the room, made a lot of money on this trade. It was just as beautiful of a trade as could be. So now we're just on watch. We tapped this 252 level. So we're gonna wait and see what next week brings. Now this candle here just looks a little similar to this candle here. So I think the healthy thing for it to do would be to consolidate between, let's say 220 and 230. Maybe we get a little bit of a consolidation zone. And if we do, let's wait for another news signal, because I'm sure, after Joe Rogan and Kim Kardashian, now who's next? Who else is going to have an exclusive contract with Spotify? So I see this as just only going up in the near term. So moving on, let's look at some new stocks for the week. We have Wingstop. Food in general has been, restaurants in general have been struggling. Wingstop has a nice delivery system, so I don't have them in my particular area, so I don't order from them, but I have ordered from them in the past. Their wings are actually pretty decent. So, I think as a technical trader, we're looking at a bull flag breakout. I wouldn't buy this breakout at the top. I would wait for a pullback either to the retest of the breakout level or possibly to this 20 simple moving average. So just a couple of ways where you can play Wingstop. Next up, Chipotle. Chipotle has been another trade that we've been taking over the last couple of weeks. You see we've had this nice run up and a little bit of consolidation, building our little launch pad here. We tapped off the launch pad, shot back up, hit that 1100 area level, and now we're consolidating again, creating another launch pad. So we have a nice bull pennant forming here. So if we break out of this and break over this 1050 level, I think we just continue to grind higher. Not much more to say about that. Next up is NUAN. Not very familiar with this company. It just showed up on my scans this weekend. So just no fundamental analysis on at this time. Maybe I'll do a little deeper dive during the week. But in the meantime, it's been riding this 20 simple moving average. We've gotten pullback here. We had a pullback here, a pullback here, and now we're off to the races, breaking an all-time high and closing at 24.41 on Friday. So just putting this on the watch list. I want to see if there's a retest of the breakout level, and that would be an area where I would look to get back in. And then if you did that, you can use your stop loss maybe underneath this volume shelf or underneath the 20 simple moving average. Just one way or two ways to play this. Next up, we have Fiverr. Fiverr is a freelance network similar to Upwork. I use personally Fiverr and Upwork in my career. I still use Fiverr to this day to look for a specific type of talent. So if I'm looking for a video editor or a graphic designer or an advertising person or a marketer, that's basically what you look for on Fiverr. It's just, if you have a skill set, whether it's marketing or advertising or design, whatever it be, you can get on Fiverr and, be part of the gig economy and making some money. So again, we have this kind of pennant forming here. We've got our launch pad developing. I included some levels above. These are the types of things that we provide to our members in our group in terms of technical analysis. We'll build out charts, Fibonacci levels, support and resistance, price targets, stop losses. I mean, we're really a team that doesn't allow you to trade alone. We want to give you as much information as possible so that you can make your best informed decisions. So next up, we have NVDA. We have the SMH breaking out looking to break out. So we're looking at NVIDIA and AMD, which will be up next. We have this nice launch pad consolidation zone forming here. We're holding, again, the 20 simple moving average. Look at all these taps, areas that you can buy pullbacks to. And now we're consolidating, getting ready for that next run. We closed at 370. I think we could see 400 next week. We'll probably play like the 375s or 380 calls to open up, depending on where we open up. And we'll just take it from there. So next up, like I said, AMD. AMD has this nice cup and handle forming here. So I think the safer play, because I've been faked out by this trade so many times, I'm going to take the entry over 60 with a price target of 73.28. I mean, that's really it. We were consolidating again in our volume shelf. It's going to launch. We need a catalyst, and that's basically it. So next up, we'll do a little healthcare. Guardant Health, GH. I'm already, in full disclosure, already in this trade. I really liked the support that we have here from our anchored VWAPs and our moving averages. We do have the 50 and the 20 simple moving averages up above, but the moving averages are stacked. So you have the 20 over the 50 and the 50 over the 200. I like this setup. Here is a trade plan that we offered to our group. I'm taking an early entry, so a slightly more risky entry. I'm not really that, I don't really have that big of an issue with taking a little extra risk, but to play this on the safer side, we're looking at an entry over $84 with a stop loss of $79.57. So we're actually under our stop loss level, but I do like an entry down here for those who are more aggressive. As long as we hold over this volume shelf, I think this is a very valid trade. Next up, TDOC. Got some personal investment in this. My fiance does work in the industry, and I always tell this really quick funny story. We both bought at around $50. I sold at 100 into resistance. She held on, and now she's sitting pretty at $200. So go figure, who's a better trader, myself or her, right? Maybe I should start taking advice from her. But in any event, we've got a little bit of a double top here. I'm really interested to see if we break through and make all-time highs. We've been running really strong. We've got we're about to stack our SMAs here, the 20 coming over the 200 soon. We had our launch pad. We've been mentioning this launch pad. If you're not on TrendSpider's system and you're watching this on YouTube, go down in the description, click on that link, and do a 7-day trial. I swear to you, this system has really accelerated my learning curve. It's made me a better technical analyst. I'm definitely a better charter. So my preference, you guys have seen my charts now for 5 or 6 months. You make the call, you make the decision. I don't really have to sell you too hard on it. All I can say is this system, I can chart a stock in about 2 minutes. 1, 2, 3, done, move on. All right, so Teladoc, love the company, love the space. This is the future. Telehealth, telemedicine, 30-second elevator speech. A lot of these doctors that are going to med school these days, they're not going back home to the small towns that they live in. They're going to the big cities, which is creating a vacuum suck of doctors and healthcare professionals in these small towns. If you had, let's say, a simple rash, or you had some kind of issue that's you don't need to go to the hospital for, but you could do it over a video conference, would you rather drive 2 hours to your nearest doctor, or jump on your cell phone or your computer and do a virtual call and get a prescription called into your pharmacy, and you're able to pick it up in 10 or 15 minutes? I mean, it's a no-brainer, right? So don't need to tell you that much more about it. Teladoc, set the alert, buy the breakout or buy the retest, whatever it is that you want to do. Buy the pullbacks. I don't care. This is the future. Moving on. Next up is Tesla. I mean, talk about the future. Artificial intelligence, autonomous technology, electric vehicles, battery packs, solar panels. I mean, what other box do you need Tesla to check? Okay. Yes. Is it volatile? Absolutely. Is it going to come back down under 1,000 at some point? Probably. But the reality is, if you can trade this intraday, it's got a lot of volatility. It's got a high average true range. So trade it, invest in it, whatever it is. Buy one every month if you can. Buy one every quarter if you can. And just hold on to it. This thing is going to the moon. It's going to Mars. It's not going to happen this year. It may not happen next year. But 3 years down the road, 5 years down the road, you have a lot of trolls out there that hate on Elon, and they're going to be haters out there, of course, for anybody, for any company. But I believe in the technology. I believe in the company. They are more profitable today than they were, a year from today. They're going to continue to ramp up their manufacturing capabilities. They're expanding their product lines. What more do you want? You're missing the big picture if you think that they're a car company. They're not. They're an energy company. And even if you think they're a car company, just think of the money that they're going to make on autonomous taxis in 3 to 5 years, on service, on software upgrades that they push over the air. That's really the gold mine for them. They're a software company. They're not a car manufacturer. Come on, guys. We need to really start thinking with our heads. Kathy Woods from ARK Investment, she talks about this all the time. You just can't properly value Tesla because you just don't know. They tick so many boxes. So anyway, I'm preaching from the box here. I'm moving on. Microsoft, oh my gosh, did really well on this trade last week. We were forming this launch pad here, and we were waiting for this consolidation zone to break. We broke last week. We rode the wave. We killed this trade. It came right down, tapped our 20 simple moving average, and wow, we got another gift. Because guess what, folks? We're going back to 200. And when we break 200, we're going to 204. And then after 204, you got to come onto the server to find out. But yeah, I think, actually, look, I got it right here, 226, my bad. So yeah, we have our price targets. We know our stop losses. We know where this thing is going to go, barring any major issues with the market. Of course, we just don't know. Corona can hit, whatever, we have to play it day by day. We can set our plans. We can plan our trades, and we could trade our plans, but we can't really anticipate what news event is going to drive tomorrow. So moving on, CrowdStrike. Love this company as well. We're at our $100 level. We've been waiting patiently for this to happen. We've been consolidating in the zone here between $90 and $100. We have our volume shelf. We're looking ready to launch. The plan is in place. I'm already in, locked and loaded, ready to go. If you want to play it on the safer side, wait for a breakout entry over 103.70 with volume. That's the plan. Moving on. NVTA, that's basically my favorite stock for 2020. I called out last year. It had a massive run up and equally, and if not more, massive sell off. Wish I added down here in this $8 range. I didn't. Like everybody else, I thought, the market was imploding and the world was going to end and yada, yada, yada. But yeah, right now we're at our breakout level. I did not add this because it was Friday. I don't know what Monday is going to bring. We can gap down on Monday. And if I would have entered the trade on Friday, one of my rules, I don't enter trades on Fridays if I can. If it's something that is just too good to pass up, then yeah, I'll enter. But very, very rarely. I'm closing positions on Friday. I'm not opening positions, these days at least. So anyway, keep your eye on NVTA on Monday and then next week. We are over the 50 simple moving average. We closed over the 50 simple moving average. We closed over the 200 simple moving average. And our other moving averages are coming up. And my apologies, I think... Yeah, I made a mistake. So we're over our 200 and our 50 and our 20. So sorry, we hit this anchored VWAP from I think it was like a previous high or a previous low, I should say, or maybe it was the IPO. I don't remember. I apologize. I should have marked that down. In any event, moving on, I do like Invitae. This is I think one of the top holdings for ARK investment next to Tesla. So keep an eye on it. Next up is Disney. Disney for right now is one of my bearish plays for next week. We have a little bit of a head and shoulders action going on right here. We got a little bit of a breakaway gap island reversal right here. I'm looking to short under 111.67. Call it a day. If COVID returns, especially now with Florida and California, guess where Disney's parks are? Florida and California. I don't think you have to think too much about this. The X factor, as people go home, maybe they subscribe to Disney Plus. Does that cancel out any losses? I don't think so, but you just don't know these days with these markets. So moving on, we're moving on here. All right, next up is GDX. It's a little bit of a gold play. I've been trying to include one gold play a week for my metals traders out there. I don't personally trade metals, but we got a little bit of a falling wedge here or a pennant. But we've been getting rejected down here. Now we have the 20 coming down, touching the 50 simple moving average. So just got to keep an eye on this falling wedge pattern here. If we break above it, we can see this high here about 40. We did have a golden cross. As long as we stay over the 50 and the 20, I'm okay with this trade. But it better to buy the breakout. But we do have a little bit of a launch pad forming here. So just keep an eye on that. Next up is Peloton. Again, these are the types of trade alerts and trades that we'll put out and post in our group. We had an ascending triangle breakout. We were very patient with this trade. We did buy the breakout on Thursday. We had a little bit of a spinning top on Friday, so not loving it, but we did close over 50-50, which met our entry criteria. We have our stop loss. We have our price targets. We're moving on. Next up is Work. Love Work. We did really well on this inverse head and shoulders breakout. We did sell the top into earnings. We had the earnings gift of a gap down. We're having a little bit of an island reversal down here, and we entered the gap on Thursday, but we closed underneath. Now, I did take about an eighth of my position off into the gap in anticipation of getting a gap rejection, which we did, and I will add those shares back if we can continue to consolidate under the gap, and then I will probably add more on the next entry into the gap and take that position off on the gap fill, but still holding a core position of shares for the short to medium term. Next up is Netflix. Netflix, another stay-at-home potential play. We've been tapping on this 450 door for a little while now. We got 1, we got 2, we got 3, and now we got 4 attempts to break through 450. What does that tell me? We're knocking on that door. We're going to break that door down soon, and when we break out, hello 500, we're on our way. So just keep your eye on that, set your alerts, and forget it. Next up is Match. I've been sending out I like to think, some clever, witty posts about Match. Do we have a date with $100? I think we do. We're marching our way up there. Match is marching to 100. As soon as we hit it, who knows? Because we do have this 1,236 fib extension above at 103.72, but we do have stacked moving averages. We have been holding and respecting the 20 simple moving average. You can buy a pullback to the 20. You can buy the breakout of 100 or the breakout of 103.72. I like this play. It does have a little bit of a short interest going on. So if it moves and if it continues to run over 103.72, we could get a little bit of a short squeeze. So put match on your radar. Let's set a date for 100. And finally, that does it for our chart review. I more than happy to excuse you at this moment. You don't have to stay for what I'm about to say. It has nothing to do with technical analysis in the respect of trade setups. I just wanted to let you guys know that, I have partnered with 2 other traders, and together we have formed a company called Our Trading Edge. We are currently in soft launch. There will be a link below if you want to check us out and do a 7-day trial. Currently, we have the 3 of us. We have an additional 3 expert traders. We have 4 stock analysts. We do a daily watch list, basically telling you what we're looking at each morning. We provide you the charts and the levels to watch. And for us, what has been the game changer is we do call out our trades over voice. There's no delay. There's no lag. You're hearing our thoughts in real time so you can get the optimal entry that we're seeing. And, and then during the day, we're scanning for setups. We're looking for breakouts. We're setting our alerts and forgetting about them until they alert us to say, hey, XYZ is breaking out. Bring your eyes to your attention. And then we alert the group and we go from there. But we always have a plan in place and we always trade that plan. So in addition to that, we also do a Sunday evening call, which is a bit of a macro overview. An overview of all the top indices as well as the top trades that we are looking for. That is exclusive to our group, some insider information. Maybe it's worth just a free 7-day trial just to kind of get a peek behind the curtain and see what we're doing. You can see some of our followers on Twitter and Instagram. You can ask them if they're in the group, ask them questions. They're our biggest advocates. There's no smoke and mirrors. We are education first, signals and charts second. Our concept really is from an educational standpoint, and that's what we're going to continue to do, and that's the platform that we're going to continue to build. We're currently doing some back-end building of our educational platform. We're working on bringing news into the room, options flow. And we're looking to do a full launch probably in 6 weeks. So if you want to get on board, now is the time. We're keeping our rates low as we're continually building out the platform. So we already filled our founder series of members. Now we're working on our builder series. We're halfway full for that group. So now is the time to jump on board. If not, we're going to be raising our rates right before our live launch in 4 to 6 weeks. So I hope you do give us a chance, and I hope if you do like what we're doing and you are a member, please just support us. We kept our service for free for 2 months just to prove to you guys that we know what we're doing and we can provide a service that's well worth it. And I'll leave it at this. I don't really talk too much about myself personally, my history, but I was in the military, and I had an interesting observation a couple of weeks ago, just in this journey that I've taken with technical analysis and stock trading. I've come to find that there are a lot of vets, there are a lot of ex-military that trade stocks. And I'm not surprised, and I'm really surprised at myself for not even thinking about this. But when you're in the military, you gain this discipline as a very young person, and it really instills really good values and really just good traits in a person. When you're 17, 18 years old, like I was, I traveled the world, and when I got out, I decided that college wasn't for me, and I learned to trade. I became a graphic designer. And long story short, I built up a freelance business while working full time. That was my side hustle. I turned my side hustle into a web development company that eventually turned into a textile design company, which I currently own with my partner. And then, last year, the tariffs hit us really bad. It hit the home furnishing and fashion industry really bad. And now, of course, COVID with retail being shut down. My business and our colleagues' businesses are really, really in big trouble. And so for me, I took this as an opportunity to explore one of my passions, which is trading stocks. I've been a swing trader for about 2 to 3 years now, options trader for about 6 months. And it's been an exciting journey. And like my entrepreneurial fire within me, I thought, what better way than to explore my passion for trading, but also to explore my passion for educating. I've in my career mentored a lot of designers, a lot of young designers coming out of college that were getting into my industry. And, I saw this as an opportunity to, take the knowledge that I've learned from my mentors over the years and really pass that on to the next generation, especially now when you have so many young people that are out of work or they're part of the gig economy and they're looking for other ways to make money. We're not trying to lure anybody into this market, but if you're already in it, then the best thing I think we can do for you is to give you an education so that you're not trading blindly, to give you a support system. We have over 200 members that are trading in our group that, of them, there's probably 50 or 60 that know what they're doing, and we all support each other. And that's the beauty of this community. So, I don't want to continue to talk too much about what we're doing and what we got going on. You can, direct message me. You can click the link and look into it for yourself. But I just want to thank you again. Every week I will continue to thank everybody who has continued to follow me. I want to thank my new followers that came on this week. If you don't know me, I hope we get to know each other over the coming weeks and months. I'm happy to do chart requests if I have the time. It's been a little far and few between the last couple of weeks because we've been building out this platform, and I'm really, handling a lot in terms of running my business, building this business, charting, trading, and doing chart requests. So the last couple of weeks have been a little trying, definitely getting a lot less sleep, but I hope now that things are smoothing out a little bit, I can get some sleep and get back to posting charts and go from there. So again, thank you so much from the bottom of my heart. Really do appreciate it. It's really coming from a sincere place. So please just keep supporting me, and I will keep supporting you guys. All right, have a beautiful Sunday. Happy Father's Day to the fathers that are out there, and we'll catch you tomorrow in the market.